Assalamualaikum and hi. We are from Group C. We present audit of long-term liability, shareholder equity and income statement.
Assalamualaikum and hi. I'm Nurul Ashiki Minta Azmi. My number metric is 273376. I will present the auditing long-term debt. Long-term debt is debt that has matured in more than 1 year. As we know, long-term debt can be seen from two perspectives, namely from the issue financial statement reporting and financial investment. Companies should record long-term forest production in the financial statement reporting and record all payment involved in the financial statement. On the balance sheet, there will be various types of long-term debt. So it is the job of the auditor to ensure that the long-term debt is not materially misrepresented. This is to ensure widespread recognition of expenditure. Following of the strategy of conducting substantive testing with the aim of enlarging the entity, effectively obtain more efficient quality. Notes and bond will be exist only low to moderate risk because of simple accounting and low volume of transaction, as well as customer often get statement from the third parties and amortization schedule. In assessment control long-term debt, the auditor must focus and still need an adequate understanding of the system of control the entity of the debt when substantive strategy. Run a check for every minute of the board to get the note and bond permission proof. Then test the sample receipt and payment sent. Always do a debt review 2 or 3 days before and after the end of the year. This is intended to make a determination for the transaction to be entered within the period. Lastly, as an auditor responsible, make sure the notes and bond are classified accurately in the long run. Substantive strategies are very important in auditing procedure and are often used by shareholder equity. Substantive procedure of long-term debt for year-end balance. Firstly, perform verification of notes and bond with creditor directly. Next, the analysis of the notes and bond payable must be analyzed as well as the accrued interest. Confirmation requests specific information about the notes from the standard bank must be able to. Note and bond with creditor must be certified and about activity sheet imbalance should be asked to management. In addition, debt-related activities should review the minutes of board meeting to avoid confusion. Always check new debt agreement to make sure record data is in proper condition. Notes and bond need to confirm the outstanding balance and make sure the last data interest has been paid. At the final stage, the accurate interest payable needs to be recalculated, and most important, the calculation of the premium amortization needs to be confirmed by management.
Hi, my name is Muhammad Zainul Zulkifli, metric number 27748. Now I would like to present the audit of dividend under this chapter. We will start our presentation with a bit definition on what is auditor's goals. Audit dividend is to ensure that the client's dividend was correct. This method requires the auditor to examine every element of the transaction as well as each component of the dividend distribution process. The auditor was expected to undertake the analytical work from the financial statement to verify that the firms disclosed a proper financial report without any misstatements. Now we go to the procedure of audit dividend. At first, we might to check in the meeting by the board of directors have been conducted to ascertain the number of dividends has been authorized. And the second, we have to ensure that the amount of the dividend and the date it is paid are in accordance with the minutes of the meeting that has been conducted. And the third, when an independent dividend distributing agent is used, the auditor can confirm the amount disbursed with which the agent. This amount is agreed with the amount authorized by the board of the directors. When an independent agent is not used, the auditor can recompute the amount of the dividend authorized by the board of directors and trace the amount to cash disbursement or dividend payable. Now we go to the type of dividend. There are two types of dividend, which are cash dividend and stock dividend. Cash dividend implies every transaction will be used cash, while stock dividend will imply the additional shares for each shareholders. There are three cycles of dividend payment. First is declaring dividend payment, which are interim dividend and final dividend. Next is recording the dividend, and the last is paying the dividend. That's all from me. Thank you.
Assalamualaikum warahmatullahi ta'ala wabarakatuh. My name is Muhammad bin Rifki bin Osman, and my matrix number is 272995. I will continue for our discussion about audit for share capital, accessions, risks and procedures. What is the meaning of the share capital? Share capital is the amount invested by the shareholders to the company. It is on the liability side as an equity account after the creation of the company has done. Share capital is the primary item in the balance sheet of the company and will separate to the common stock and also the preferred stock. We go to the next one, audit accession to share capital. The double entry bookkeeping method keeps both cash and equity share capital in control. Both equity and preference share capital are different types of share capital, which is a separate claim. The firm's management and shareholders are subject to share capital accession as of the date of reporting in accordance with applicable auditing and accounting standards. This will include disclosures on the company's existence, rights and liabilities, as well as the upkeep of share capital records. The last one is primary risk and share capital. Risks associated with share capital have diminished. Almost none of the major publicly traded corporations have stock-related concerns about the primary risks. The biggest risks that mentioned for equity share capital are misrepresentation in the balance as a result of error and intentional overstatement by the company.
Ya, Assalamualaikum and hi. My name is Khalila Amalina binti Muhammad. Matrix number 272424, and I will continue the presentation with audit reserve and retained profits. Retained profit is influenced by the current year profit or loss and as well as dividends announced and paid. The net profit is calculated by the subtracting expenditures from revenues, and these net gains are put into reserve and surplus account. After distributing the dividend to equity and preference shareholders, such proceeds are transferred to reserve and surplus. Reserve are represented under retained profit, while surplus is shown on the equity side of the balance sheet. It's also included in the end of the reporting period statement of changes in the entity's equity. And other transactions such as prior period adjustment, correction of errors, stock retirements, valuation account for marketable securities, foreign currency translation, and changes in retained profit appreciation may and of course have an impact on changes in retained profit. Okay, next, move on to the audit accession for reserve and retained profit. There are three accessions in order to audit reserve and retained profit. There are completeness, existence, presentation, and disclosure. First of all, completeness. Auditor need to ensure all transactions involving retained earnings must be recorded. The next one is the existence. Auditor need to determine if the profit or loss on the profit and loss statement has been adjusted properly, and if there any adjustment that affected retained profits, it must be declared in the board meetings. Last but not least, presentation and disclosure. Auditors need to make sure any restriction on retained earnings are being disclosed. Next, move to the audit procedure. Procedure of audit reserve and retained profit is concerned by audit accession. Firstly, begin audit the retained profit by obtaining schedule of the account activity for the period. Next, the auditor need to ensure that the beginning balance are agreed with prior year's working paper so that the income statement can be used to determine the net profit or loss. Lastly, auditor need to make sure that the retained profit are reported under the reserve and surplus categories on the liability side of the balance sheet. And auditor need to make sure Necessary disclosure related to the written profit are made in the footnotes. That's all from me. I will pass the presentation to the next presenter. Thank you.
Next, we move to audit of income statement account. Before that, I introduce myself. My name is Ikwataki bin Azhar. My number matric is 273145. When do auditor need to audit income statement account? Because it can be used to external user for making a decision. For example, creditor use income statement to decide whether the company able to pay loan or not. But how we want to audit income statement account? There are 4 substantive procedure can be used. Firstly, testing of control for various business process. The purpose is to evaluate the internal control of the company. If the auditor found the internal control was operating effectively, the auditor can reduce the control risk. Before that, because of that, each revenue and expense account can be reliable evidence. Secondly, perform detailed tests of balance sheet accounts and related income statement. These 2 accounts are related because the double entry concept. For example, can be seen at the table below, where if the auditor audits the account receivable, he must also test the bad debt account. Then perform substantive analytical procedure on income statement account. These 2 procedure compare the current revenue and expense account with the period or study the trends. And for example, if the amount is very large compared to the previous year, the auditor must investigate it because there would have a fraud. Lastly, perform detailed test of selected income statement account. Selected mean examining some account further. Usually, the auditor analyze in detail the transaction included in each account. For example, legal and audit expense account would have supporting document. The auditor must examine the amount and the information in the document. That's all from our group. Thank you.